Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Will Rhind. He's the CEO of GraniteShares. We're going to discuss single stock ETFs and what type of investors they are appropriate for. Will, it's great to see you as always, and it's been a year since GraniteShares launched the first single stock ETF in the U.S.
Yeah, great to see you, Jill. Thank you for having me.
You got it. Now give the audience some background on what single stock ETFs are.
So leveraged single stock ETFs are kind of, as the name sounds, they're ETFs, but they provide exposure, leveraged exposure to an individual company. So that might be 1.25 times levered or 1.5 times levered to a company like a Tesla or Meta, etc.
Are these on the long and the short side?
They are long and short side. We currently at GraniteShares offer just long side, but there are other companies that offer short as well. But they are a way for you, obviously, to express magnified exposure to popular companies.
Right. Well, I mean, certainly the run that we've seen since the beginning of the year. What type of investor is this appropriate for? Because you're talking leverage, you're talking about names that clearly have a lot of beta.
Yeah. So I think we're coming up on a year, and I think when we look at who's using these kind of products, there's a bit of a spectrum between, I'd say, active investors that clearly are using this to get exposure to major names with a bit more leverage, to hedge funds and other sort of proprietary trading firms, if you will, that are trading a lot of these stocks on a daily basis.
And you also trade them in Europe as well. They actually launched in 2019 prior to being here in the US. Has the reception been the same?
It's been quite similar. I think that here, just because the US is such a big market, that from our perspective, there's more of a reception here in the US, at least a quicker reception, maybe we can say. But in Europe, they're popular as well. We have over 100 products in Europe, and all sorts of different stocks and themes, etc. So here, offering is a bit more limited, but they've grown a lot quicker.
Why would you use this type of product versus going to the options market?
I think there's a number of reasons. So first and foremost, these are ETFs, so you can buy them in your brokerage account. There's no margin requirements built in to the investment. So in other words, you can buy it and you can hold it for a short period of time or a long period of time. It's not like an option whereby there is an expiry, and regardless of what happens, there's a binary element to the particular trade. So a lot of people like this because it's a way for them to get exposure to leverage. It's a light level of leverage compared to perhaps what people would do with options or futures, and your risk of loss is ultimately your principal amount. In other words, you can't lose more than you've invested, which is unlike, say, some futures positions or other traditional forms of leverage where you can potentially expose yourself to unlimited losses.
Right, well, and you don't need the margin for it because you're not leveraging by yourself, basically, because it comes within the product. Do you expect to launch more product with single stock ETFs?
We do. I mean, it's been very successful so far for us. I mean, we've really liked the reception that the product has had in the market. And so, clearly there's been big tailwinds behind it. So having NVIDIA or NVDL, which has been our most popular ETF this year, providing the exposure to the AI theme that everybody's really loved this year. But we see more growth within the sector, not just for major tech companies, but for other companies as well.
All right. Appreciate the insight as always. Well, thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.